Hey everybody, this is problem 12-3. This is the B version. The A version is on your homework. I'm just going to jump right in. This is the income statement of Hubble Company as presented below. Here's our income statement. And there's also this additional information. It gives 4 lines of additional information and tells us to prepare the operating activities section of the statement of cash flows for the year end December 31st, 2014. So we'll start by doing the header here. So this isn't a full statement of cash flows, it's just the operating sections. We're going to call it a partial statement of cash flows. Then we'll okay, so we'll start with our cash flow from operating activities since that's the only section we're actually going to do. We start with net income. And that's given to us right here on the income statement. Tell Excel we're working in dollars here. And then after we get our net income in there, we're going to do adjustments. Sometimes it'll say something like adjustments to reconcile net income to cash provided by operating activities or something like that. I'm just going to say adjustments to make our life a little easier. All right, so now the first thing, remember, the first thing we do is we look for non-cash expenses, like depreciation expense, things like that. And so we have our sales revenue, our cost of goods sold, by the way, most income statements don't do this whole beginning inventory, purchases, goods available for sale, ending inventory, total cost of goods sold. They just tell you the cost of goods sold, but this one's giving you more detail. Anyway, so we're looking for non-cash expenses. There's our depreciation expense. If you remember, the adjustment is that we add non-cash expenses back in. So depreciation expense, we're going to add that back in, which is $105,000. Amortization is just like depreciation. It's a non-cash expense. So that's $15,000. Then we'll start looking for changes in our accounts. Usually we would look at a comparative balance sheet. Instead, we have this information. So accounts receivable decreased by $290,000. So we're going to just say, I'm just going to put accounts receivable. That was a decrease. And then remember the rules. If we're dealing with an asset account, and then it's a inverse relationship. So if the asset account decreases, we're going to make a positive adjustment to cash. And if the asset account increases, then we'll make a negative adjustment to cash. And there's a whole lot of ways to explain that, but the bottom line is this. If assets go up, it takes cash to pay for that. If assets are going down, it means you're freeing up cash. If I say any more than that, it'll just confuse you more. Try to wrap your brain around what that means as you do these problems. And then with liability accounts, it's the same, meaning if a liability account increases, then we're going to adjust our cash upward, and if a liability account decreases, we're going to adjust our cash downward. And again, the short way to think of that is if my liability increases, that means I'm borrowing money, so I'm going to have more cash. And if a liability decreases, it means I'm paying off debt, which is going to take cash. All right, so accounts receivable is an asset. It's decreasing by $290,000, so we're going to adjust our cash up by $290,000. Then we have our inventory. It increases $140,000. Since inventory is an asset and it's increasing, I'm going to do a negative adjustment to cash for that amount, $140,000. Prepaid expenses, they increase $175,000. Since that's an asset account, the increase of 175,000 I will adjust as a deduction of cash. And then we have accounts payable. Let's see, accounts payable increased. So that's a liability account. If a liability account is increasing, then I'm going to adjust cash up with cash increasing as well. And then expenses payable increased. So that's a liability account that is increasing, so I'm going to adjust cash up. I'll say total adjustments. And then we'll have our net cash provided by operating. Which will equal the net income plus the adjustments. Wait, oh, I know I did net income wrong. Look, it's 1,245,000. No wonder that smelled bad. Try telling your boss it was just a zero. Lots of people have gotten fired over just zero. All right, and that is it. So that is the partial statement of cash flows. This is the operating section for the Hubble Company, problem 12-3B.